Welcome to the Daily Update, where I'll go over the action in the market for Monday, September 18th, and then we'll see how things are looking for Tuesday, September 19th. We're turning more negative now, even though we had a slight up day, so it goes in the books as an up day, and some of our indicators tip up when that happens. But at the same time, a lot of our momentum oscillators are rolling over negative, but we're still not trending right now. We have a pretty big thing happening on Wednesday with the FOMC. They'll probably not raise interest rates at this meeting, but it's going to be their statement and the press conference after that, and they're going to try to read into whatever Jerome Powell says to try to come up with, okay, yeah, we think it's going to go up or we think it's going to go down, and they're secretly just going to interpret things. And we're also coming into a historically weak time of the month. Now, September is weak all around, but we usually get some kind of an upward move in the middle part of the month. We're beyond that now, so we'll have to see. Turning negative technically, turning negative seasonally. We're not trending. We'll just evaluate things to see where they go from here. Please note that the free online course that I did is finished now. I recorded it and I uploaded hour 1, 2, and 3 as 3 separate videos. So feel free to check that out if that is of interest to you. Also, let me know if there's other things in the future that you would like me to cover. Just post a comment, send me an email, see if there's some other things. I like doing the online courses. So if you feel that you get something out of them, either to be a part of it or to watch the recording, let me know. Okay, let's go back and talk about what happened. Right at the open, we had a lower open, but we quickly bounced from there. We were able to climb above the unchanged level. Then prices advanced up to the daily pivot. That was the overhead resistance for Monday's session. It was at 44.65. Then after hitting the daily pivot, we went back down to the unchanged level and we actually went negative for a while, but then we were able to close slightly positive. We were up 0.07% and volume is now back to below average. Not really a surprise. It's probably going to be low in Tuesday's session as well, unless something big happens to cause volume to go up. But everybody is kind of in wait and see mode as far as the Fed is concerned. The technicals, yeah, we're switching back more negative. A lot of our oscillators are dropping below their midpoints, and things are just not looking all that great right now. Now, a good solid up day, and that could change everything. We just have to go with what we see right now, and it's all about the Fed, at least as of right now as well. The small caps, they continue to be weak, and we've seen this now. They're back down to dealing with their 200-day moving average. On the small cap index that we look at, they're actually below. With the Russell 2000 index, we're coming down to that level again. We are on Fed watch right now, so we'll be keeping an eye on that. And we're still oversold or extreme negative with the Stochc RSI. That didn't bounce up. And then this scenario that's kind of getting a bit outdated now because it's probably going to get replaced with a new one. We're just not quite sure what that new scenario is. It'll likely be set by what the Fed says and does throughout the course of this week. But we've been working with this idea that the economy is stronger than expected, but that's not really influencing what the market thinks interest rates will do because we're 99% that we're going to leave them unchanged. The thing that's been moving into the market is they're probably going to have to keep rates higher for longer. Not so much raising rates at this point, but that could always shift. We're still keeping an eye on the Chinese economy since it produces a lot of revenue for S&P 500 companies. Oil was down in Monday's session, but the overall rise has been a concern, mainly from an inflationary standpoint. The dollar was up and interest rates were down. Didn't really have much of an impact on the market. The yield curves that we follow are still inverted. We're back down now to neutral with sentiment where we're at 48, so we could tip in either direction. Our trend is now negative. Even with the slight up day, the red line is now going above the green line on both our short and intermediate term chart. We're below the moving average with both short and intermediate term ADX indicators. And so we're not in a trending environment. Even though we have the slight update, I'm keeping the bias at mixed and the momentum at mixed because the market is very unsure about things right now. The economic reports that came out, we just had the NAHB Housing Market Index. It came in at 45, weaker than the 50 they had expected, and also weaker than the 50 we saw last time. Here's a chart showing how it is coming down a little bit. So we're seeing some continued weakness in the housing market. And then here's where we're at with the Fed probabilities. There's a 99% chance that they're going to leave rates unchanged. And here is how it's changed over the last month or so. The dark blue area, that's where we're at right now. And you can see how it's gradually gone up to where we're at as the market gets more and more convinced that's what will happen. Then we're also keeping an eye on interest rates. They were virtually unchanged in Monday's session. They're 4.32. When we get above 4.02, that's when the rise in interest rates can have a negative impact on stocks. Here's the intraday chart where we did have a lower open, but we quickly went back up above the unchanged level and we hit the daily pivot point. That was the resistance. We dropped down from there, came back down to the unchanged level, and then closed a little bit higher. Looking at growth versus value, where the blue line, which is growth, it is underperforming value right now. That's more showing some weakness in the market. And when we look at our growth to value ratio for the S&P, it actually did pretty well. It finished near the high for the day and was positive when you compare the two. Then looking at the end of day growth to value ratio, where it ticked up slightly, we've been going sideways, but we're in a longer term uptrend. Keeping an eye on the VIX, which if we do hit some difficult times going into the rest of September and possibly into October, we would likely see stocks going, or this line going up as stocks are going down. That's historically what has happened. We don't know if it's going to play out that way, but this is historically what has happened in the past. And then looking at the VIX, where it ticked up with the line chart and the bar chart, we're seeing volatility picking up. That might be coming into the picture now right ahead of the Fed meeting. Folks want to hedge using different options in case the market really starts to gyrate. This is more positive though. The 5-period moving average of the equity put call ratio, it's starting to turn back down. We don't know if it's topped now, but it's looking more like it topped now because we're in an extreme positive reading. It's starting to come back down. Now we can always turn and go back up, but for right now, this is looking more positive. And we can see where we're above the extreme reading and possibly could come down. Looking at the VIX to VVIX ratio, it's also starting to turn back down slightly. So that is positive longer term, but also even longer term, the equity put call ratio based on 253 periods, it's continuing to advance. The advanced decline ratio, still above the moving averages based on price and volume. We're seeing a little bit more weakness right now based on volume. The new highs, new lows study, we're starting to see it more convinced going down with our 5-period and with our 10-period. We're just about at the midpoint with the advanced decline ratio as the market's been chopping sideways. This is more negative too. The accumulation distribution is showing more weakness. And the Chaikin money flows also showing a little bit more weakness. The cumulative cumulative NYSE advanced decline line also starting to show some weakness. We might find some kind of support at this other low, or we could continue to fall down below that. When we look at the trend here, though, it's still holding up for right now. The ratio between risk on and risk off is continuing to show shorter term weakness. And here's our trend. We're declining with the ADX. We're below the moving average, and the red line is starting to cross above the green line. And we're seeing pretty much that same thing with our short-term ADX. The daily chart, we're now below the 50-day moving average, and we're having a little bit of a difficult time trying to break back above this overhead resistance. We've been chopping above and below it, and it's going to take some real conviction for the market to determine what it wants to do. Then down below, we see where volume really dropped to below average. The Stochc RSI is still extreme negative, and our stochastics going lower in the short term, turning more negative in the intermediate short term, and we're still looking positive in the long short term. The force index continues to be below zero and is declining. We're below the 50-period double and triple exponential moving averages, so that's a little more negative. The go, no-go system has the purple bars, that's negative. We're just about at the midpoint. We dropped a little bit below that, but with our highest high, lowest low value. The TTM squeeze starting to show some weakness, turning the darker shade of blue. So even though it's positive, it's starting to come back down. The balance of power just a little bit above the midpoint. The BPI for the S&P 500 is now dropping below 50. That's turning more negative. The McClellan oscillator for the S&P is still below zero. So based on price, the summation index is rolling over and we're already declining based on volume. The NYSE McClellan oscillator is also below zero. That's a broader measure, and we're turning down based on price and volume with the summation index. The Elder Impulse system for the S&P still remains negative with the red bar. The mass index, we're just kind of waiting to see if some kind of a signal had been triggered. We're getting kind of far away from that. So the more we move away from this, the more irrelevant it becomes. The PMO continues to go sideways as far as momentum, rolling over based on price, still positive based on volume, but showing some weakness. With our PMO study, we're not really changing all that much with the PMOs that are rising. A little bit of an improvement with the buy signals, but rolling over with the PMOs that are above zero. And the Swenlin trading oscillator, this is also turning more negative, dropping below zero based on price and volume. The NYSE bullish percent index is still below 50. That's negative. The NASDAQ 100 BPI also dropping below 50, turning more negative. We're still inside the Ichimoku cloud, and our oscillators are pretty much starting to turn down now. Some of them are hanging in there a little bit, but we're seeing the momentum turning more negative. The moving average tree coming back down into the moving averages. The 20 periods, those are shorter term. We're falling below those. We're still hanging in there a little bit with our different 50-period moving averages. The Bollinger Bands coming back down to the midpoint, a little bit below the midpoint with our standard deviations chart. And we're coming down to the midpoint with our open, high, low, close study. We're still negative with the parabolic SAR. The dots are on top. And we're dropping below 50 with the RSI based on 14 and 9 periods. The cockpit curve buy signal has now gone away. It's crossed below the red line. Longer term, the weekly chart of the S&P, the MACD, continues to be negative. The Heiken Ashi is looking more negative. The Kegi is still positive, but the black line is pointing down. The Renko, we did have another block in here. That went away. It's still positive, but showing some weakness. The 3-line break is back to looking a little more positive. And the equal weight S&P 500 continues to underperform the rest of the S&P. The Dow has been going sideways. We're still below the 50-day moving average, still below the pivot. And the diamonds remain negative. The NASDAQ 100 dropping just a little bit below this red line, which was a previous high. We're wondering, can we stay and get back above the 50-day moving average, or are we going to drop down below that? The Elder Impulse system for the Qs remains negative. The NASDAQ 100 momentum is starting to turn negative. We're rolling over with the PPO. The NASDAQ still below its 50-day moving average, still below the pivot. NASDAQ with the Fibonacci retracement levels, we're below the 61.8% level, and we've been chopping above and below that. So it's not a hit it and turn kind of an area right now. The FANG index still below its 50-day moving average, but in a longer-term uptrend. The small caps dropping down to this S1 level and below its 200-day moving average. But when we look at the Russell, we're coming back down to the 200-day moving average. This is the 4th time we've hit this now during this most recent downturn. Are we going to fall through it, or are we going to be able to get some support here and then bounce back up? The Elder Impulse system for the small caps remains negative. The mid caps also still a little bit above their 200-day moving average and a little bit above this S1 level, where the Elder Impulse system for the mid caps is negative. Dow theory, we were up slightly with the Dow. We're seeing some more weakness with the transports, which is negative. We saw a little bit of a pullback in the utilities. And the transports to S&P 500 ratio did tick down just a little bit. This is not showing any kind of strength right now. Bond yields were down just slightly in Monday's session on the 10-year. And then Tom Bowley's research, where September is the worst month of the year, and we're starting to come to the end of this positive time and entering this more negative time. So what's our outlook for Tuesday? We still are dealing with earnings reports. The United Auto Workers strike is still continuing. We're wondering, is there going to be some kind of a government shutdown? That's a political tactic that's being played right now. And then the student loan repayments are supposed to be restarting here pretty soon. The technicals, we're mixed overall, but we're turning more negative and we're not trending. In fact, on the next charts, I say we're turning negative. We'll have housing starts and building permits coming out. These tend to be leading indicators of the housing market. And then keeping an eye on the geopolitical events. Right now, it's mostly about the Fed. Here's the updated economic calendar, and we'll get the FOMC announcement on Wednesday. We'll get LEI on Thursday. There's a lot of other reports that'll be coming out, but they're not all that influential. The Stock Traders Almanac statistics, we're neutral to negative with all three of the indexes that we follow. This is also the week after options expiration, which tends to be negative, 69.1% of the time. We will be on the 12th trading day of the month, where we're starting to see some weakness. You could make a case that we might see a little bit more strength when you look at pre-election years. But when you look at the Carson study, we're topping out, and now this is where, on an average basis from 1950 up to 2022, we tend to see some weakness. And we're also seeing that same kind of a thing with the NASDAQ, where we're seeing a little more weakness going into the end of September. And then if we have topped out with the S&P, also some more weakness. And then we're only up with September 33.33% of the time with the S&P. So our scenarios, not going with the down one, even though we're turning more negative, we're not trending right now. We're not going with the up one, also because we're not trending and we're seeing a lot of weakness. So if anything, we're defaulting more to the sideways pattern right now. But the red line is going above the green line, so we would default to negative. So the warning signs, we do have our long-term trend signals. We're still above those trend lines. I'm sorry, we're still below those trend lines. And we're coming into a weak month and also a weak period of a weak month. The equity put call ratio is turning back up. That's negative. The risk on posture is showing more weakness. The S&P 500 oscillators are turning negative. The NASDAQ 100 oscillator that we're watching is also turning negative. The cumulative new highs, new lows for the NASDAQ are still showing weakness. The 3-month yield is still above where it was back in 2007. We're waiting to see if that's going to turn and come down. The parabolic SAR chart is negative. The Copic curve buy signal has now gone away. And then we're dealing with earnings season. The positive signs, the setups and seasonality that I went through in the weekly video, those are still in the background. The daily special K chart is positive, where the weekly chart is negative. The S&P is still above the downtrend channel upper line. The equity put call ratio is turning down, which it had been going up, so this could be positive. The S&P is outperforming utilities, but we're seeing utilities bouncing back a little bit right now. And the Staples to S&P 500 ratio, it might be going through a shift. It's still declining overall, but we've seen a bounce up over the last couple of days. The Russell, the small caps, and the mid caps have recently generated golden crosses. Small and mid cap growth has been going sideways, but it's still positive. The financial sector has a recent golden cross. And so our conclusion, we're turning negative and we're not trending. And we can say that in the short and intermediate term, we're still positive in the long term. Have a great day. I hope you found this video helpful, and I will talk to you in the next video.